Good morning, everyone. Let's continue with the next topic, that is disposition of partners' interest. In our previous session, we have seen that what are the basis, what will be the basis of the partner in the partnership firm, what is the basis of the property which a partner is contributing in the firm. All those things we have already seen in the previous session. Okay, so in today's lecture, I am going to complete the partnership topic. Let's understand the disposition of partners' interest. Disposition can be done in three ways, right? If a partner is having a partnership interest, they can dispose their interest in the form of sales, exchange, or other transfer. Okay, so they have the option that they can sell their interest, they can exchange it, or they can do any other transfer to someone else. So of a partnership interest, it results in a capital gain or loss. So if you do any of these three things, it will result in the capital gain or a loss for a partner. Okay, so gain or loss can be determined in by using this formula. What is the formula? Amount realized. So when you're selling or exchanging, whatever amount you're realizing, plus if you have a liability which is attached in the partnership firm. So you were at risk for, let's say, $10,000, $20,000. So that is a benefit for you because now you're selling your whole partnership interest to someone else, right? So amount which you are realizing at the time of sale plus liability which is now being sold to someone else, you are going to take it as a total amount which you have realized, minus any adjusted basis of the property of a partner's interest in the partnership firm. Means here, let's take this example. On sales, K is a partner. He received a cash of 10,000. Okay, but he was having a partnership interest of 20,000. Out of this 20,000, along with this 20,000, 15,000 was a partnership liability. So can I say what amount did he realize? He realized 10,000 also. He realized 15,000 also, because now his liability will get assumed by the person, the new partner who is purchasing this interest, right? So 10,000 plus 15,000 minus what is the adjusted basis of that particular partner in the partnership firm, that is 20,000. So you are going to add 15 plus 10 minus 20, that comes to 5,000. If it's a positive, it will be a gain. Okay, same way for suppose, let's take the another example. Let's say the basis which is there is same 20,000. We are taking the same basis and we have the attached liability of 15,000. Okay, wait, so basis here we have taken is 0. Okay, let's see this. The basis is 0, but we have a liability of 15,000. Okay, so 15,000 will be the amount minus adjusted basis of interest is what? 0. So 15,000 is the liability minus 0 is the basis. So 15,000 totally will be the gain amount, not loss. Just a minute, guys. Here there is a little bit confusion. Yeah. So total gain will be 15,000 because we were right now liable for $15,000, right, as a liability. Now it is getting sold to someone else, but you don't have any partnership interest in it. So whole 15,000 is a benefit for you. Okay, but if you have a partnership interest in the organization, you are going to reduce that much interest. Okay, got it, guys? So sales, this interest, whatever is the selling price, you have to take that and then you have to compare it with the liabilities. Just add the liability and then reduce the total interest. Whatever is the amount, if it's positive, it's a gain. If it's a negative, it will be a loss. Okay, so this is a one type of disposition. Then payment to a partner for unrealized receivable and unrealized inventory. Yesterday we have seen very well in our previous topic that unrealized receivable, unrealized inventory is something which will be used by the cash basis taxpayer. Okay, so if a partner is exchanging the partnership interest, means he is giving up his partnership interest, against that the partnership firm is providing him a money or a property if he receives a money or property. Okay, then the share of partnership unrealized receivable inventory item will result in ordinary income or loss. Now remember this thing, this is an important thing, that whenever you are going to sell a partnership interest, against that if you receive money and property, only the part of that money and property will be your ordinary income or loss. Okay, so treat this amount, you are going to treat this amount as a partner receive for sales or exchange of property, there won't be any capital asset. Okay, for money and property, whatever you are going to receive, and if it's an unrealized receivable inventory, up to that amount, you will be treating it as an ordinary income. Got it, guys? Here one example is there, adjusted basis of the partner's interest, let's say it's $0. Potential ordinary income means, let's say unrealized receivable, unrealized inventory, ordinary income is like $5,000. If a partner is selling his interest, he's not having any partnership interest right now, he's selling his interest to someone else for $10,000. So up to the amount for which he was having unrealized receivable, unrealized inventory, up to that potential ordinary income, it will be treated that the 5,000 will be treated as an ordinary income, and the remaining 5,000, which is his benefit, will be treated as a capital gain. Okay, next is important thing is liquidation at the partner's retirement or death. If a partner is retiring, or if a partner dies, then what will happen? In exchange for his interest of partnership, whatever interest he was holding in the partnership, first we are understanding in the case of liquidation, in the case of partnership is getting liquidated, and if he receives anything in the exchange of his interest, will not be considered as a not a distributive share or not a guaranteed payment, but a distribution. This liquidation, in the form of liquidation, when you receive something, okay, anyways the partnership firm is getting liquidated, against that if you receive your share or some property or some distribution, these distributions will not be called as the normal distribution. This distribution will not be called as a guaranteed payment. Okay, next is not made in exchange for interest but for income. As an exchange, just for liquidation, you're not getting this amount, but if you're getting for providing any services as an income you're going to receive, then it will be called as a distributive share or a guaranteed payment. Okay, if the payments are made in liquidation. Now for in case of partner, what the partner will do in this case, they will recognize gain, which is amount distributed minus whatever is the basis in the partnership firm. Let's say he's having the basis, adjusted basis of just 1,50,000 for example, and the distribution which is getting due to liquidation is $2 lakh. So what you are going to do, the excess distribution of 50,000 which you are going to get is your capital gain. Okay, now this 50,000 will considered as a ordinary only if this 2 lakh contains any distribution of unrealized receivable, unrealized inventory. Let's say the partner gets a distribution of 1 lakh in the form of cash. Okay, and just a minute, guys. Let's take this example. 2 lakh distribution has been made. Out of this 2 lakh, 50,000 is in the form of unrealized receivable, unrealized inventory. 1 lakh is in the form of cash, and 50,000 is in the form of property. Now what will happen is this total gain will first be allocated to unrealized receivable inventory. What is my unrealized receivable inventory? It is 50,000. So whole 50,000 will be called as my ordinary income. So here you have to recognize whatever is the adjusted basis. In our example, it is 1,50,000. Okay, minus unrealized receivable inventory or money which you have received, that is 50,000. Okay, so this much amount you are going to receive, remaining you need to recognize. Only if the distributions are made in the form of money, unrealized receivable, unrealized inventory, this portion will be called as your ordinary. Okay, got it, guys? Now here is one example. Let's see based on that topic only. A sells 50% of his partnership interest for 5,000. Means at what cost he is selling the partnership interest for 5,000, but he is not selling the whole share. He is just selling his 50% of share of the partnership interest, and the basis of this is $3,500 only. Okay, now let's see this $3,500 along with this what other things he is having on his hand, inventory and current asset. Can I say this both are unrealized receivable and unrealized inventory, right? So take the basis and compare it with the FMV. Is there any appreciation in the basis? Yes, for inventory we have a 2,000 of appreciation. So 2,000 into only 50% share is getting sold. So $1,000 will be captured as a ordinary gain. Got it, guys? You have to take a difference between the basis and the FMV in case of inventory or any of the asset. See, here there is no appreciation, there is a reduction in the value. Basis is 2000, but right now if you go and sell it in the market, the FMV is just $1000. So what you are going to do, take out the total gain. What is the total gain? How the gain will be calculated? Just take how much cash you have received, compare it with the partnership interest. So my total gain is 1500. Out of that, I will recognize ordinary gain of $1000. What is the $1000? The difference between the basis and the FMV into how much percentage you are selling will be considered as the ordinary gain, and whatever is the remaining out of 1500 will be your capital gain. Okay, this is the total gain which you are going to recognize, but only the nature needs to be identified based on the separate items for inventories, current asset, cash, account receivable. All those unrealized related items you need to calculate it separately by taking the difference of the basis and the FMV. Okay, let's take one more example. Susan is having 25% interest, adjusted basis, selling 25% interest. Let's say here just make it, Susan is selling 25% of her partnership interest. Adjusted basis is 40,000, right? Her adjusted basis of partnership interest is 40,000, sales the interest for 53,000. So what is the total benefit? 53 minus 40, it's 13,000 is her total gain. So let's see how much this gain will be bifurcated, whether it's ordinary or it's a capital. Let's check what all things is given in the question, that is basis and FMV is given. Okay, the cash is given, unrealized receivable, unrealized inventory, fixed asset. Can I say for this, I will not be considering this for the ordinary gain purpose, but whatever is this three items will be considered for ordinary gain purpose. So let's see what is the difference between the basis and FMV. Here it is 0, here it is 32,000, okay, and here it is reducing. So here you are not going to take, but right now what you will take is directly take 60,000, all the FMV 60,000, here 32,000, and here whichever is lower, that is 40,000. Got it, guys? Here is an appreciation. See, whenever previously in previous video we have already done this in a chart format, right? So there you understand, there you remember, whenever there is appreciation of basis, it needs to be allocated to that thing, the second step. So here the two steps are getting merged. First you need to allocate it to the basis. So what is the basis? 60,000 and 40,000, and here the 0 is the basis. Second allocation will come to the appreciated amount. So here there is no appreciation in this, but here there is an appreciation of 32,000. So you are going to take 60, 32 and 40 multiplied by 25%. That much amount you will be called it as a ordinary gain. But our maximum gain is just 13,000. Why I should recognize whole 33,000, right? And second thing, the last one is fixed asset is having a depreciation of 20,000. The FMV is just 40,000, means can I say 20,000 is getting depleted. So his share, her share, Susan's share is 25%. So we'll multiply it and it comes to $5,000. So this much, this 5,000 is a depletion. We are going to reduce it. Now let's see what is the depletion. 5,000. Okay, this 13,000. First we added the 5,000 to this 13,000, that comes to 18,000. Now you have to compare this 18,000 with our total gain of 33,000. It is anyways still less than the 33,000. So what is the capital gain or loss you are going to calculate? Take 18,000, reduce 13,000. Okay, that is $5,000 is your capital loss. Got it, guys? Anyone is having any question based on this example, please let me know. I know this topic is little bit difficult to understand, but if you remember it using examples, it will be easier for you to understand the concept. Okay, always remember the allocation process is important. In exam they can ask certain question, they'll give you a whole question in the case scenario kind of thing, or the whole amounts will be mentioned. You have to just jot it down like this, right? Mention what all things he is receiving, the partner is receiving at the time of distribution. What is the basis? What is the FMV? Take the first take all the basis amount and then take what is the appreciated amount, okay, and then multiply it by the share which she is disposing. So that much is your ordinary gain, but my total gain is just 13,000, right? Now the second step you will see is fixed asset. Is there any appreciation? If it would have appreciation, I would have reduced it over here, but it's a depreciation, so I'm going to add it over here. So it comes to 18,000. Now compare this 33 to 18, right? The maximum ordinary gain will be 18 only, not more than 33. Like 33 is my amount which will be up to 33,000, it will be ordinary gain, okay. But right now if you guys can see here, my 18,000 amount will get compared to the 13,000 amount of the gain. So whatever is remaining, that much will be capital loss, okay. Got it, guys? So let's quickly summarize the whole distribution topic which we have done. Distribution can be done in the form of withdrawal by the partner in the anticipation of current year earning, distribution of current year or previous year earning. Third, it can be complete or partial liquidation of a partner's interest. And the fourth, the distribution of all partners in a complete liquidation of a partnership. Okay, four kind of distribution can take place. First, withdrawing by the partner, right? Currently, like it's a regular distribution which a partner is going to take. Second is if a partner is going to take a distribution of current year or previous year earning, okay. Third means from retained earning is taking distribution, is taking from current year earning, okay. This distributions we will see a little bit more when we do a 1120 S corporation topic. In that there is current year earning, previous year retained earning. In case of corporation, like how accumulated ENP will be distributed over there, that topic is important. I know like many people are not aware about the allocation thing. Those who are still working on in the practical life also, they are still not aware about the allocation part. In your 1120S form, there is a page on which M1 and M2 reconciliation is mentioned. On M2 reconciliation, they have allocated it in the 4th step. So that thing you have to understand it theoretically, why we allocate it in that sequence, okay. That we'll do in the corporation chapter. Complete or partial liquidation is there, means you are totally disposing of your interest, and distribution of all partners to all partners in case of complete. See here, the partner is selling or exchanging or transferring his interest. Here the partnership firm is totally getting liquidated. So this is what 4 types of distribution. Now let's see effect. What will be the effect on the partners basis? What will be the effect in case of partnership? For partners basis, whatever is the adjusted basis, directly take as it is, minus money received at the time of distribution, minus adjusted property of any other property if you have received. If it's a not negative, not to be negative, it should not be a negative, or else the basis, the adjusted basis, if still you are in continuation of your partnership interest, the basis will be 0 if it's a negative, okay. Partner will recognize gain to the extent of money received. This we have already seen. This is just a quick summary of it, all the whole chapter which we have done, just a summary of the distribution topic. Whatever money you are receiving, you have to compare it with the adjusted basis of the partnership interest, okay. So this remember that topic 15,000 20,000 example which we did, okay. See here, if you take a disposition, this 20,000 15,000, in this case if you receive a money also, then the money amount you have to compare it with the adjusted basis of your interest, okay. Now the second here, for based on this, again I have given example. See, in part 2 book now I have put a lot of examples, so that even if you have not studied at all, you can just go through the examples and understand the concept for the first time, okay. So adjusted basis of a partnership is what? 14,000, right? He has received a distribution in cash of 8,000. So can I say adjusted basis is 14,000 minus 8,000 he has received a cash. What is his new basis will be 14,000 minus 8,000, okay. Now he has also received a land with the adjusted basis of 2,000 and FMV with of that particular land is 3,000, okay. Now gain will be recognized, will be 0, because 8,000 which is receiving is less than the adjusted basis. But the partner's basis in the partnership firm will be what? 14,000 minus 8,000 minus the land's adjusted basis which is receiving. So the basis, adjusted basis will be just 4,000, Okay guys, partner will recognize the loss on distribution. Partner is going to recognize the loss on distribution only and only if it's a adjusted basis is of the interest was more than the distribution, means he's getting a lesser distribution, and this kind of distribution is a liquidating distribution, means the partnership firm is getting totally liquidated. I have invested a lot of money but I have received only some part. So whatever is the excess which is not recovered, I will recognize it as a loss. Okay, so distribution in the money, unrealized receivable and unrealized inventory, if these three cases are there, then only property will not be counted over here. Only money, unrealized receivable, unrealized inventory, these three will be considered at the time of distribution, and if you receive and if there is a loss. Okay, partners basis of distributed property, whatever distributed property you have received, adjusted basis to partnership before distribution or adjusted basis of partnership interest minus money received. So this 14,000 minus 8,000 we will do, and we'll compare it with the adjusted basis of property, that is 2,000. Whichever is lower will be the new basis for my land or building which I have received. Got it guys? This is a small summary of whatever we have done in the partnership chapter. Next is effect on partnership. For partnership firm, what they will do, they will not recognize any gain or loss. But exception is substantially appreciated inventory item if they are selling, or unrealized receivable if they are selling, because partner is allowed to take the losses. So same way on the other hand, if a partnership firm is gaining having a gain, they will recognize it. Okay, they will compare it just the adjusted basis with the FMV for whatever they are transferring. Let's take one more example, and here a total stepwise manner I have mentioned. So you can just remember the steps. Example is adjusted basis in the partnership is what? 30,000. Distributed the property which is having an adjusted basis of 20,000. Let's say I am having the adjusted basis in the partnership firm of 30,000. My partner's capital adjusted basis as in the end of the year is 30,000. At that time, I receive a distribution of property of 20,000. Also, I have received a distribution of cash 4,000. So, what I'll do first, I'll calculate the new basis. Means 30,000 was my basis. Out of that, I received a cash distribution of 4,000. That comes to 26,000. Now, this 26,000 I'll compare with the properties adjusted basis 20,000. Whichever is lower will be my new basis for the property. Got it? Step 2, basis in the partnership. In partnership, how much will be my basis? See, 26,000 is my new basis. Out of that, I receive again the distribution of 20,000. Here, while reducing, I'll straight away take the adjusted basis of property always. Now, let's twist this sum and let's make this thing as a 28,000. So, whichever is lower, the basis of property is 20,000, but when I calculate my existing basis in partnership, I'll always take the basis of properties adjusted basis, means instead of 20,000, I'll take 28,000. So, can I say there is 2,000 of negative figure, means 2,000 I will recognize as a capital gain, and my basis in the partnership firm will be $0, and the value of the property for the partner will be 20,000. Got it guys? So this is the whole scenarios, like all kind of scenarios we have included in case of distribution. Now partners basis of distributed property in case of complete liquidation. When you have a complete liquidation, this we have already seen. This is just an allocation which I have provided it in the short format. You just need a quick revision. You can read the last 3-4 pages for the whole partnership chapter. So adjusted basis of the property, in that case, you are just directly going to take the adjusted basis of partnership interest minus any money received. That much will be the adjusted basis of property. Now, the property received minus adjusted basis is less than the adjusted basis in partnership interest. Means, can I say you are receiving less than whatever your interest was there? So, there is a kind of loss, I can say, but whatever amount you are receiving, you need to allocate it among, like, let's say you receive a money also, receive property also, you receive cash, you receive any other property or any other continuing property. All those needs to be valued. All the basis needs to be decided. You can't take all the thing and just take the total FMV and include it as a basis in your books. No. You need to allocate the proper basis. It will depend on 3 allocation. First, straight away allocate it to the properties basis. If you receive a property, the adjusted basis. Second, you are going to allocate it to the unrealized appreciated value, FMV minus adjusted basis. If there is anything remaining, will be allocated against the FMV of the property. So here is the same example which we have done yesterday. 55,000 will first get allocated to the basis, that is 10,000 and 5,000. Then there is an appreciation in the first asset, right, of 35,000. So the remaining amount, whatever is left out of 55 minus 15 minus 35, this remaining will get allocated in the ratio of FMV, that is 4:1. Okay, so for partner, the partner will recognize property A in his books at this 5,000, at 35,000 and plus 4,000. So this is the value of property A, and the property B will be simply 11,000, that is 10 plus 1,000. Okay. Property received minus adjusted basis, if it is more, means can I say there is a profit. So what you are going to do, let's take one example. Partnership interest is 20,000, but you received a property C and D with the adjusted basis of 15, and 15 is 30,000, means you are receiving more, right? And FMV is 15 and 15, right? FMV is same, the adjusted basis is same. There is no unappreciated amount. So whatever amount you receive, 20,000, first allocate directly to the basis, that is 15, and whatever is the unrealized depreciation, if there is any. For property D, you can see the adjusted basis what, 15,000. Okay, there is an unappreciated amount over here. FMV is just 5,000. So 15 minus 5, this 10,000 you are going to reduce from this. Okay, so 30,000, 20,000 minus 30,000. This 10,000 is going to be anyway reduced, so I'll just add it over here. So can I say the allocation is done properly now? C will be recorded at 15,000 only. D will be recorded at 15 plus this allocated amount of 10,000 will get reduced from this 15, means the total amount will be 15. And see, ultimately na, in each case the answer will be your FMV value allocation. But in certain situation where there is an appreciation, here you can see the FMV was what, 40 and 10, but what is the ultimate value which you are going to record is 44 and 11. Whenever there is an appreciation, only that in that case there will be a changes, but if there is a depreciation in the depletion in the value of the asset, always the FMV will be the answer. But don't remember like this, always do this chart format and understand that if there is an appreciation, just adjust it over here. If there is a depreciation, you are going to add that much amount back. Okay, so in that case, this will be the example. Got it, guys? So next is if distribution in liquidation is less than the adjusted basis in partnership interest and there is no appreciation of property, then partner can recognize the capital loss. Okay, same way if there is a loss, then they can easily recognize this. Here is one example. Let's do it quickly. C purchased 25% of interest in X partnership for 17,000 cash. Okay. Now partnership owned inventory which was having a basis of 14,000 and FMV of 16,000. Got it? So here there is already we can see there is an appreciation of 2,000 between the FMV and the cost for the inventory. Now cash is 17,000. The adjusted basis, C has just purchased 25%. So you are not going to take whole 14 and 16,000. What you are going to do is you will take 14,000 into 25% and second FMV 16,000 into 25%. Take the difference of this much amount only. See, in previous all examples we didn't took the percentage, but here it is specifically mentioned that the partner is purchasing only 25% interest. So you will take only 25% of all the inventory, asset, whatever is there in the company, in the organization. So take the difference between FMV and the basis, that is $500. Okay. Now this 17,000 is first attributable to the inventory and basis of the property. So 4,000, okay, and 3,500 like this. So 2 years later, what happened? This is a situation where 2 years later, the person withdraws the entire share and received only cash of 1,500. So what will happen is, inventories basis we are going to take is 3,500. Other property basis we are going to take is other property, let's say in the year of distribution, the year of withdrawal, the other property is having the basis of 6,000. This is an example, okay. Now what you are going to do is 17,000 cash you have put into the business minus you have received only 1,500 against it, right? 17,000 was what you invested. Now you have received only 1,500 cash. So whatever is the remaining, you are going to allocate it first to the inventories adjusted basis, that is 3,500. Then unrealized amount, that was 500 over here, and remaining will be the basis of other property which is receiving having the basis of 6,000. But since you have not recovered your partnership interest, you will recognize this property at 11,500. Got it, guys? This is, see, all examples which I mentioned in my book, it is of different scenarios, different case scenarios are there. So every scenarios are important. Question can be asked based on any scenarios. You can just remember if the situation comes, what formula you need to apply, what chart you need to apply. Okay. Next is sales or exchange of property, which we have already done. This is just a overview of it. If it's a gain in case of sales or exchange of property, it will be treated as an ordinary income. If you are holding more than 50% of capital or profit interest in the partnership firm, then you will be considering it as an ordinary income, ordinary gain. But if there is a loss, it will not be allowed for sales or exchange of property directly or indirectly if you are owning more than 50%. Means this is a related party transactions. Just compare this with the related party transactions. If you hold more than 50%, you are going to consider that gain as a capital gain. But if you are having a loss, you are not going to recognize it. So basis of the partnership interest minus any loss. A loss will be directly reduced from the basis of the partnership interest, and the remaining will be when the partnership interest is sold and when the gain is realized, this previously disallowed loss will get reduced. If you guys remember, partner A is having a share of, let's say, 50% in the partnership firm. Okay, and his basis in the firm is 50,000. Now what it does is he is selling a property to partnership firm only. So can I say they both are related internally? Directly 50% is owning this person. So whatever amount the partnership firm is going to pay, it's possible that he is going to offer at a lesser than the FMV. So he is bearing a loss. Right? Let's say the adjusted basis of the property which he purchased was 20,000, but now when he sold it to the firm, he's selling it for 10,000. So can I say he's bearing a loss of 10,000? So in that case, what will happen? This 10,000 loss which he has bared, this will get reduced from his partnership interest. So remaining 40,000 will be his new basis. Okay. Now let's say when this firm sells the property further in the market, and they sold it for let's say 40,000. So what is the gain for them? It's a gain of 30,000. They have bought it for 10,000. Now they are selling it for 40,000. The 30,000 gain, they will not pay the capital gain on 30,000, but they will straight away reduce this disallowed loss over here, and the remaining amount 20,000 they will call it as a capital gain for the partnership firm. Got it? This is the case of the related party transaction. So that's it for the partnership firm. I hope you guys are solving a lot of MCQs while studying, because see the practical in part 2 there will be a lot of practical questions. A lot of things will be mentioned based on the practical case scenarios. If you don't have that practice to solve the mocks, you will not able to clear the part 2 exam. Part 2 is all about solving a lot of mocks. You know the concept, you know the calculation. Do take all the examples and solve on your book by your own. Okay, even though if you have bought my book, you don't have to just mug up the things, just solve it on your own in the book, right? Understand it, understand the concept, and then complete the topic by following with the mock papers. Got it, guys? So this is it. Tomorrow, just after this session, I will be uploading the next topics, that is corporations. After that, I will be uploading the basis of property and then specialized returns. Okay, so these 3 topics are already recorded, so I am just going to upload it in this playlist. Since we are because of the busy tax season, people are not able to attend live, so I can understand that. And that is the reason why I am not going to take live. All sessions are already recorded. I am just going to upload it in the current playlist. Okay, so if you guys want to ask any questions or queries, or even if you want to join the regular batch, our part 2 batch will be starting from 25th of October. It will be on daily basis. The part 2 batch will be there on morning time. The timings are not yet decided. So Monday to Friday, the lecture will be held for part 2. If your exams are in the month of Jan and Feb, and if you're still not confident, you can go with our regular batch. Okay, so to enrolling in our regular batch, you can contact me on 8160202597. Okay, this is my phone number and WhatsApp number, so you can just contact me over there for enrolling on the part 2 batch, or if you have any questions, queries regarding any topic, you can just let me know. Okay, guys, and this this will be a duration of 45 days batch, and it will be constant. So when we start from 25th October, it will get completed by the end of November or maybe start of the December. Okay, so since we are taking it on daily basis, unlike on weekend, we prefer it on daily basis. See, consistency is the only thing which can prove a proper success. Only studying on weekends will not prove the consistency. It will not, see, people get lazy when we keep the sessions on weekends. So that's why we are going to keep it on the weekdays only if you want to join for the part 2. For part 3, it will be also starting from 25th October. Okay, the timing will be shortly announced. Part 3 will again go only and only for 25 days. So when you start from 25th October till mid of November, you can complete with the part 3. If you have booked your exam for both the parts, and if you are not yet confident, right, you can start our regular batch. Again, for enrolling it, just contact me on this number and I'll be able to help you. So thank you guys. I hope you are doing great on the revision sessions. We'll meet again in the next video. Please go through the corporation chapters. Thank you so much. Have a good day.